Good morning traders, today is February the 19th. My name is Neville Hornsey, I'm a market analyst for YouTrading, and I'm going to be looking at the major indices, looking across the charts to see if the price action can give us any clues for what might happen in the upcoming sessions. During the Asia-Pacific session, the major indices generally followed on from the risk-off mood during the previous US session. It was due to concerns over rising bond yields and a disappointing US jobs data. The fall in prices took a turn higher though after reports out of China said that the consumption surged during the week-long Lunar New Year festival, which may be indicating that the Chinese GDP is going to get a bit of a boost. The Nikkei 225 shown here with the JP 225 March contract shows how within the last few hours we have reversed a 4-hour bearish candle, and that the 30,000 level may be acting as a bit of support now. If prices do come down though, there is a small range here which will be a target for the bulls to maybe consider buying into that. Just looking at the US dollar index, this looks likely to come off a bit more today as we've broken through some near-term support from last Friday's resistance highs. That leaves the door open for us to start testing back down towards the $90 level and this sort of double bottom here. Moving to Europe, the German 30, which follows the DAX, is trading within its upper recent ranges, having found support in the last few hours. I'll be looking to see if we can get back above the 14,000 level and then maybe test these most recent highs. Looking towards the sentiment indicator, most of the traders are bearish. There's 70% bearishness here. The UK 100, which follows the FTSE 100, has come back down to test last week's consolidation zone, and it's still trading within its 4-month trading range. But for me, while we're above the 6,500 level, we'll be looking more likely to move towards these recent highs and then see if we can get above the 7th of Jan or the early January 2021 highs. Moving on to the USA, the three major indices there, starting with the USA 500 contract. The uptrend is still very much in play and no major supporting structure has been broken as of yet, as we're basically just grinding higher on this daily time frame. There's a lot of talk around bond yields, interest rates and inflation, but generally the vaccines and the stimulus, the more positive news, is keeping things moving higher. This is actually following the Dow Jones Industrials and it's in a very, very tight weekly range. So I do expect this one to be the first to signal any major momentum changes, and that could be to, a pop to the upside or maybe a major reversal to the downside, but hopefully we won't be trading within this ever tightening triangle for much longer. Moving on to the USA Tech March contract, which follows the Nasdaq. I noticed a few things, especially yesterday. I keep an eye on the London opening sort of level, so at 8 a.m. if you mark off the level there, you can see I've done it here in the last 5 trading days. Yesterday we actually started trading above the 8 o'clock level, and that hasn't happened for the last couple of days. And in fact, on Monday we had the President's US holiday, and then on Tuesday the price action was, didn't test above the London Open, but it did break through the Monday's range, and then the preceding days didn't test it either, and we just kept on coming down. So the fact that we closed above it yesterday gives me some hope that this recent liquidity test here, where we sort of tested for the stops, found some support, maybe a bit more demand. I'm hoping that today in the London session that we move up higher and then hopefully test the all-time highs again. Reasons for this, probably because of the Chinese news, and good data out of China is good for the rest of the world, as they're the second largest economy in the world. And any further good news stories that we could get today could be the catalyst to really give this a bit more of a boost as we come to the end of the week. Okay, stay safe, trade well, and I'll catch up with you again next week.